Can we break out now? Gonna break out now. We might break out here. Just want to keep an eye on this. That was the half-hour trigger. Hey, we're live finally. Yay. My wife's trying to kill me. Like, I swear. I can't win. Please, I want to win. Hold on here. Got my kids trying to kill me. There, we go. My daughter's on a mission. Like I'm not gonna say it publicly. Like, she's dirty. She's like a young teenager, dirty, gross young teenager. She's got the Wookiee in her. She's got a little bit of Wook in her, and I'm like, we can't do the Wook. Like I can't, like I like the liberal independent woman, but I don't like the Wookiee. I've always told myself that I can only have one hippie in my life at a time. I can't be surrounded by hippies. I can only have like one. I like having hippies in my life as long as there's only one. If I have too many, as long as we have it, they get to use it. You know, they want to share as long as you have it. So they take too much. They take too much from me. And my youngest daughter is like a Wookiee. I don't know if you know what a Wookiee is, but I'm like, you can't do this. I'm like, this is unacceptable. I'm like, okay, so the paper trading, we met on this yesterday, or I asked, time out, let's rewind all this. So I talked about getting a paper trader a long time ago, about a year or two ago. We looked into it, researched it to implement one. Then I even hired coders for one. They failed me. I've had coders fail me. I can't tell you how many times. I can't tell you how many times like coders have said I can do this, and they can't. Coders will say, "Yeah, fuck that guy. Why can't he do it?" And I can code. I suck at it, but I can, and I make the attempt to learn how to code. I know the maths, and I can work with Excel and pivot tables, all that kind of stuff, and I know the modeling for this stuff. But I need help in the coding side of things because I'm not a coder. It's just that, like, listening to a coder say that is like listening to an attorney say you should go to court alone. You don't do that. You bring an attorney with you to court, right? You don't go to a doctor with a non-doctor. You go with the person that this is what they do. So I've actually hired coders to do it, and they all failed for what I wanted it to be. And it wasn't a question of money or anything. It was just a question of, can you do this specific thing? So we shelved it, and then we went back and looked at a white label paper trader, and not just paper trader. We looked at a option profit calculator, paper trader, that kind of stuff. We shelved it, but it was there waiting. So this past weekend, I went to Joe and asked him for where we were on that project, and we looked at it yesterday in a meeting yesterday morning. Well, I didn't get it until yesterday morning. Joe's internet was out this weekend. He lost fiber at his house. He's got his phone's on internet, all that kind of stuff. His whole house is on internet. So when he got into the office on Monday, he sent it over to me. Where we looked at it more closely yesterday morning in meetings. BluesSky and Joe looked at it, and it's not quite what we want still. So we're going to build it ourselves. And you know who is a kick-ass coder is Bork. He says he's not. He says he's a full stack, but he's amazing. So we're gonna do it in-house with our own people rather than going out of house. Now I don't know how long it takes to build this thing. There's a bunch of source code out there, and I'm not really a fan of vibe coding at all. But if you know how to code, vibe coding is good. Let me explain. Let me go into more depth with that. AI is to me, I am not a fan of AI. At least not yet. I'm not a fan of it, and I'll tell you why. There are some things that I'm very smart, and there's some things that I'm not very smart about. Right? Some things I'm really smart. Wait, what am I doing over here? Come on. Some things I have a lot of knowledge in, more than most people. More than, I would say, in some things, more than most of the world. In my profession, what I did in my profession, I worked for top 10 in the country in an industry that has quarter million maybe of what I do. So that's how good I was at my job. So there's some aspects of my life that I'm very knowledgeable in, and you probably are too, right? Think about like the things that your profession or your interests. There's probably an aspect to your life that you know a lot about, and you could be a janitor and have information that only quality janitor would know. Maybe it's technique. Maybe it's a chemical or a process or something. But most people out there have something in their life that they're very good at, or even a few things. And if you ever ask AI something that you know a lot about, and I mean like a lot, like you've become more than even just proficient, more than a master of that thing. Like you have wisdom and time in that subject matter, or maybe even something that's very current. Could even be something that's like current. I often relate this to if you've ever been a public person in life. I have been a public person. I've had newspapers write articles about me, interview me, and I've had some kind of a relationships or some kind of relationship at different moments in my life with news media, and I've never once seen an article written about anything that I was involved in that was correct. It was never correct. Sometimes you got to pay these people one way or another to even write something nice about you, and that would shock you, right? You can influence reporters. I'll tell you right now. I've seen it firsthand. Sometimes it's just relationships. Like, got to know that person, invite them out to go to places and stuff like that. You're in their circles and stuff. So, and I think that speaks to the same point, which is if you know a lot of information about a specific particular topic and you ask AI about that topic, you realize how fucking dumb AI is. Does that make sense? So when you then ask AI about a topic that you know a lot about maybe, but not everything, or less than that, AI can be perceived as being very smart, right? Because they're speaking about a topic that you are not an expert in. So it looks like magic. Wow, that AI is really smart. But then the moment you go back to asking it a question to solve of something that you really, really know about, you're like, oh God, that thing is fucking fucked up. You know what I mean? Or it's got really old information, or it's got something that's not relevant at all to what I'm asking. And people try to like argue with you about that stuff, but that's how I feel about AI. It's like vibe coding to me is like super sketchy. You could literally have like you could code something and have that code be scraping your data and sending it to Bob in Maryland, and you would never know, would you? You would never fucking know. You get what I'm saying? So I believe in using people that code or what they're good at, what they do. Make sense? That's why you go to a doctor. It's why you go to an attorney. It's why you go to a tax preparer. It's why you go to an accountant or whatever it is you do in your life. It's why like if you're raising a child, you go to someone that's had a child and say, what am I doing wrong here, right? You have some experience in this? I'm dumb. You don't go to AI and say, how do I stop the baby from crying? Maybe some of you do, but I don't. So we're going to go in-house with the development. Now, I don't know how long this takes because I'm not a coder. There is a lot of code out there that we can find or vibe code and use a coder to help with the vibing. You know, if you have like a coder that can use AI to their advantage, it can sometimes speed up the process. But so I don't know when it launches, but I think it's going to launch soon. And we're launching a bunch of other stuff too. So part of that conversation yesterday was also with a bunch of other shit we've shelved that we've worked on in the past. And so Bork yesterday was like, write me the wish list, and I'm like, I already got it. So I went through the wish list yesterday, and I'm almost done with it. I'm like, I think I'm like 3/4 of the way through with it. So we should have this wish list done. We're gonna have a bunch of cool shit for the website and stuff. So and I have I write the Black Skull models for a bunch of other shit. So I'm like, we'll start doing these. We'll start modeling stuff for the or not the Discord, but the website for members. So we're working on it right now actively. It just hasn't happened today. So and the options that we had, I wasn't happy with them at all. It was like ragtag stuff. Like, oh, we got to use this for this and that for that and this for this. And I'm like, why don't we just start buying fucking Polygon IO data and start using it for a bunch of different cool shit. So that's where we are, I think, right now with it. So it should happen soon. The good news is that by like the 15th, if we can get it done by then, I think that's where the first buy is going to happen. Around the 15th of October, somewhere in there. If you read the Larry Williams preview for the year, that's when we become most supportive too, right? So we're likely going to start there. And on that note, if you want to know what I think we're going to do, we're more than likely going to buy Ford, and we're going to sell options against it. Not guaranteed, but just because it's only $1,000, we can probably accumulate enough Ford stock to sell options against, because we need 100 shares. And then from there, we'll start making some money. And when that starts to generate us some cash, we're going to then start buying options, more than likely spreads, like call spreads on SPY and Qs and stuff like that. And then we're going to layer this whole entire thing. So we're going to have, we need to do is like, step one is get $1,000, right? Step two is put $100 in the bank every week. Step three is start to accumulate shares of either an ETF with enough liquidity or a stock with enough liquidity that's not going to go bankrupt, and basically trades with the SPY. And from there, what we need to do is we need to generate income. And the way to generate income usually that's low risk is typically owning an ETF or owning something that's not going to implode. I don't think Ford's going bankrupt anytime soon. It's low risk in the world of risk. And then what we'll do is we'll start generating income. Once we're generating an income, we can start doing spreads. Then we can start buying the SPY. And then we can start funding our adventures with zero dates. You never want to like fund your adventures with zero dates with your $300 that you have saved over from Fridays. In my view, some of you think so. or funding your adventures and spec growth with your paycheck. I like keeping my paycheck, and I like buying shit that lasts. Don't you? I do. I like buying shit that appreciates in value with my paycheck. I like paying my bills. I like paying all that kind of stuff. So for me to adventure with gambling, it has to be something I'm willing to lose, or it comes from somewhere that generates that money frequently. It's not because I'm blowing myself up either. It's just it's a rule. If I lived my life like that, I would be fucking divorced with I'd be fucked. So it's kind of like buying a car and not taking it for a test drive, because you think it was a great deal. That's poor decision making skills. So, so this should happen soon. It should happen sooner. I'm hoping that it happens where we get this nice leg up into the end of the year and into Feb, March. And we got something else to talk about. I was thinking about doing a post or a video on this. We probably need to talk about this. We got something we got to talk about. What are you guys doing out there? What are you guys doing out there? Yeah, we're gonna buy some stock. We're gonna buy a whole bunch of it. We're gonna do $1,000, then keep adding to it. It's gonna take time. We have to talk about something. You guys ready? All right. We're gonna go here. Hang tight 1 second here. You can disagree all you want. Hold on a second. I'm losing a bunch of shit here. I'm listening. You guys are missing. Hold on a second here. Holy shit! I'm being asked some. I'm being said some weird shit. Yeah, I got vibe coders everywhere. Pissed off the vibe coders. They pissed off the vibe coders. But you don't know if it works. What are you talking about? You don't know if it works. All right. Hold on. All right, hold on. I'm getting lost. Give me 5 seconds here. I gotta stay on track here. Hold on. I gotta stay on track here. Hold on a second here. Okay, hold on. We gotta get through this. I gotta talk to you guys about something. We gotta talk. Now listen. I am not a bear. Okay, I am not. I am a fucking permabull. I always see the glass as more like the glass could be 10% full, and I'm like, dude, we can work with this. Like, I'm that guy. Look at me closely here. Listen to me. I am persistently optimistic. I look like hell right now. I don't know why. But here, we'll go back to this. Oh, no, we'll go back to this one. I want you to know that I am persistently positive. And the reason I think that I am is because it might be part of me. Part of it is because of my experience in life, in the military. You know, you can see really bad things and just be grateful for what you have, and you know what you can work with in life. So I don't when I bring this conversation up to you, I don't want you to take this as Cap's bearish, because I'm not, and I'm not bearish here either. But I do need to make you aware of something. If you're watching this show, I need you to be aware of something, okay? And I got to point this out right now to you. I saw an article on the Wall Street Journal. I think it was it Washington Post, maybe? Hold on here. Crash. Hold on here. It was either the Washington Post or it was the Wall Street Journal. It was a couple days ago. Hold on here. Just check really quick, see if I can bring up the article. It might have been the Journal. Let me just check this right here. Okay, so now this is this guy's a fucking bear, but this is from the Wall Street Journal, though. This is, you know, like I'm not personally a fan of the Wall Street Journal. I'll just be honest with you. Like I don't some of the stuff they write, I don't mind reading, consuming, but I'm not a fan of this kind of stuff. And there's a big viewership and readership of this stuff. And the title was Black Swan Manager Sees Huge Rally, Then 1929 Style Crash. And I just want to address this publicly with you. And what's important about this is we're going to start turning here soon. Wait a minute, I'm the wrong one. Hold on there, wrong one. But I want to talk to you about address this with you so that you have some awareness. Number one, we don't have the same market as we've always had. We have a lot of manufacturing in our markets today. A great example of that was right here. This is a great example of the Fed, the street, Treasury, policy, working in conjunction to limit the pain after COVID, in my view. One of the biggest things about this time period was that the Fed was no longer adversarial a little bit before this, and they gave you a heads up. And we front ran tightening. And once the bond market felt as though we were doing a good job with tightening, the market lifted up. And what this did was it gave the market a time correction rather than a sharp correction. This it's not quite flat, but it's like time based and limited some of the damage that could be done in here. So a lot of our markets today, in my viewpoint, at least as of today, we also have circuit breakers, and we have the internet, and we have insurance. Funds have insurance. Banks have insurance. Now, that doesn't mean something bad can't happen, but a lot of our market today is manufactured. Now, there can be a moment where the market says, oh, God, we committed fraud. We're going down in depths of hell and zero and all that kind of stuff. I'm not in disagreement that can't happen, but that article said 1929 style crash. If you follow like Bob Kendall, Larry Williams, those guys see that same thing, or at least a period of decline. And you see the dollar being repriced right now. That's part of it, too. And we have a big economic change coming as well. And I want you to think about like if you're in time periods for technology and government. If you like coming into new technology, you sometimes need new governments, new economies to fit that new technology. And then when you come into some new technology or newer technology, you adjust the economy and the government and policy to fit that. And they do this over and over and over again. Now, within here, you can argue with, should we do this technology or not? Should we limit it? That's all different shit. You'll see people that are greedy want everything, right? We want everything. I want to have a pig slaughterhouse, and I don't care about putting kids in there. So they'll fight for that, and you might fight back, but that doesn't really have anything to do with the stock market. It can, but not really. What does have to do with the stock market is policy, economy, new technology, that kind of stuff. So this like greater view here is that, when you go through these periods here, sometimes when we change economies, you will have a volatility in markets. It's not necessarily negative either, because when you're like lose a job, you're gaining a new job. You'll often hear people be like, oh my God, we're losing these workers due to this new technology. What they don't tell you is that there's other workers that we need for the new technology. This is the like nothing ever happens thing, like that meme. This all falls in the nothing ever happens too. Somehow, some way, we persist. That's the truth. We persist. And you should think about that too when I start to talk to you about crashes and, we'll never recover from this, or a decade of decline and that kind of stuff that could potentially happen. The reason I'm saying that too is because we are near a top. We are technically, without fail, going back to the beginning of the stock market near a top. And I think within the next 3 months, we're near a major top. But that doesn't necessarily mean that in a contrived market that we can't reset to go higher. And have to slip into this, 10-year down move or whatever that everybody's calling for. All these very smart people. Markets can persist. And I want to show you something here if I can really quickly. But I need you to know this, and I don't want you to be fearful of it. If you're long the markets in duration, if we get a big red bar below the daily trigger and the daily trigger starts to cross the weekly, you have plenty of time to step out of the way of risk. And even a 1929 style crash. I think I brought this up a week or two ago, but because of where we are the past week, believe it or not, we're cranking right now on some higher level shit. So I want to show you this if I can really quick. And I want to show you what this looks like when it's when it starts topping. When we come into these tops, this is the period I want to show you right here. Because we're right now we're right here. I'm going to show you where we are. And I want to show you this last little bit right here. And it's not today, but we are ramping quickly. And we're coming into the end of a quarter as well. Like this will fill out to the upside. This month will fill out, and that month will fill out, right? And all these weeklies will start filling out as we get into 2026. Yeah, snap a line in there. Let's go 2026. Let's do February, March. And if we were to just do this right here, let's say we just keep going up, right? Start entering this kind of a bubble up here. Yep, one. Start some kind of a right there. And excuse me. Put together a couple more quarters of going up. And I'm going to change this to, instead of green, just a white. And this shouldn't cause panic at all. Should not cause panic. If we traded flat, we don't have to panic. But more importantly, we're getting there. We're close. So if you're looking at, I always like looking at this stuff right here in particular. I always like seeing like, if you have this at home, I always like to see like that maxing out of quarterly, that maxing out of monthly, and that maxing out of weekly and daily at the same time. So like the four horsemen of the apocalypse. And you can see it right here, even with the daily. You see it right there? So you're like maxing out on every frame. Right in here. Now this is January of 2018. This is December of 2016, about where we are. In some respects. But what I really want to show you here is it doesn't necessarily have to be a crash. And what's more important is this ramping period right here. Do you see how we come into these tops and we start to really blow off a top? You see that blowing off? Notice how I wasn't looking at price. I was just looking at velocity. And you see this like ram up here. And not until we peak on all four of those do we go wham to the downside. In this case, we had a crash here, but we continued higher. And we blew off more here. So it's not necessarily an indicator that we're going to go into, like 1929 or anything like that. So the first posit is we could see real acceleration in the economy or in the stock market. And then even if afterwards, this wasn't the end of the stock market, was it? January 2018 was not the end of the stock market. This was a big flush here, but we stayed on track. The monthly trigger kept going higher. And you can also see something more important, which is when we begin to go risk off here, you can act with your kids or whatever, your wife or your husband or whatever. Now you might say to yourself, well, Cap, what if I get caught? You're not going to. Even in the 1929, if you have these triggers, you can go back on the DJI and look, and the crash was predicted. So the same thing applies here and in the future. Okay, so as we begin to accelerate, I think the acceleration is, probable and likely up here. And if you're like, well, I'm afraid of the crash cap, you shouldn't be. When that crash happens, you're going to see the big red bar. You're going to see literally big red bar. It'll cross the daily trigger. And that daily trigger may or may not come down. So you need to see that daily trigger come down for that literal risk-off behavior. And if you see it, like if you see it at any point, we're not quite there right now. We could go another. I just showed you December of 2016, right? Let's go back and look at it. So this is December 16. This is Jan 18. This is a year-long period. So this could extend. We could extend out to March. As a matter of fact, if you'd have your down period in springtime, you'd have an up and then a down into fall, possibly, right? So fall would be brutal next year. High. Yeah, we can go do the 1920 style crash, but you're already going to know to be risk off if that took place with the dip. Like fuck those guys or whatever. But as long as your duration with the daily trigger, weekly trigger, whenever they're crossing down, like daily over the weekly, you're risk off. And when the daily comes back up over the weekly, you're risk on again. And the reason I want to talk to you about this, and more importantly, is because we're in this contrived market. And no one can tell you if we're in 1929. No one can tell you if we're going to do something more like this. And we have examples of doing other things. We have examples of running a hot market in the 90s. We have some significant, these are the late 1990s. And this was the last bubble that we're in, right? This is a tech bubble, but we were just like down and straight back up, down, straight back up, down, straight back up. And we never lost the monthly trigger. We never crossed with the daily trigger. The daily trigger stayed up, or even if it came out, you saw it uncross even in this time period. You've got the risk off. You got the risk off behavior here. So you're stepping off, and then you get the risk on behavior right here. Risk on again. So you're like risk off, risk on again. So I think that no matter what's ahead with this, it's definitely coming. I promise you. If you look at this on like the DJI, it goes all the way back to the late 1800s, right? So you can look back on the full history of the stock market with these triggers, and you'll never be let down as long as you follow those rules. And I think that's important moving forward, to have that open mind to any outcome and not just we're going to crash like 1929. I don't think you can predict that. I don't think that it's easy to predict like we're going to have a fraud market, or we're going to have burning tires, or World War III, or any of that kind of stuff. So there's two key takeaways here. Now, first key takeaway is, or three key takeaways. When you start a bull run, you want to get long and stay long. And that's known by what? Price, hourly, daily, weekly, monthly, right? All in order. And until you see that daily trigger cross that weekly trigger, you're just buying pullbacks the whole way. And then when you do get that roll and you see that risk off behavior with the daily trigger to weekly trigger, you pull out. you literally sell. And you get back in only when that daily trigger and weekly trigger uncrosses. You might miss some trades or miss some FOMO, but if you follow those rules, you're going to have a better time. You're going to have a good time in life, I promise. And you have to get back on too. So like let's say you get a cross of the weekly, it's not an easy thing to do. If you get a cross of the weekly, let's say, I want to prep you for this now because as we come into it, I want you to remember it. Like this is something you should remember. This is something you should apply to alerts if you can. Hey, I'm seeing this happen. But if let's say you've got the weekly coming here, and you've got the daily trigger crossing, right? And the price would be over here somewhere. You have the daily trigger crossing, but whenever we get back up in here again, and you see the price coming back up over here, you need to be, it would be something like that. You need to be able to put that risk back on again. Say, I'm getting back in, you know. Well, and you know they're going to tell you is that we're getting a second leg. You literally have to be able to manage your emotions and be able to fall that back up again until so you can get back on the train to go up, right? On the train, off the train, back on the train, up. And if that train doesn't show itself, if we do, let's say we went to like the extreme bad, like, oh my God, we get the 1929 crash, you know, it's not really going to matter to you because you're going to be protecting your money anywhere elsewhere. There'll be places for you to put your money. You can even sell the market down to some extent. You can buy dips along the way for short duration. And you can also put your money in other places. But the key component here is wealth preservation is paramount. And the wealth preservation game is completely different than the day trading game, the spreads game, the selling options and owning the market game is kind of in there. But these are different ways of looking at the market. And you need to be able to shift for duration, knowing when you're risk on and when you're risk off, and not feeding into the fears, the doubts, the insecurities. They can be very, very, very detrimental to your wealth. Extremely detrimental to your wealth as you get older. And I know there's some sellers out there that are like, well, I live and die by the sell side. I get it. You know, but there's going to be a time where, hey, look at that. We're following it almost perfectly. Check that out. Cool. Look at that. We're coming on down now. So I want to address that for you as I want to address it so that I want you to be aware that we're topping right now. We are in the process of topping. I can't tell you, and I can't predict if it's a 1929 style crash or not. And especially in this environment that we're in, where a lot of our market is, in my view, pre-planned. You can disagree with that, but I think a lot of our market's pre-planned unless something goes wrong. Yeah, go on down there and touch it. Get on down there, touch that bad boy. You want to see it? So this is the making bulls cry. Bam, right there. Oof. This is when the show is good. So I want you to, if you're out there watching the show and you're a bear or something like that, or if you're a bull and you're afraid or whatever, I can't predict that either. Like, or it's like I can't predict that we're not going to roll today. The only thing that I'm looking for is that daily trigger crossing that weekly trigger. And I think simplifying your life like that is way easier. You know, you're just buying dips. You're buying the hourly. You're buying the daily. Infrequently, you're buying the weekly trigger. And very infrequently, you're buying the monthly trigger. And meanwhile, while you're doing all that, you're just watching that daily trigger. And as long as that fucking thing doesn't cross that weekly, you're good. You can be buying dips below it. If you start to see it cross, you can have bought those dips and just cut yourself loose and get out. And I'll walk you through it as it happens. If we see that daily trigger cross, I'm going to tell you risk off. And I'm going to tell you when to go risk on again. As a matter of fact, when we, in 22, when we turned up, I think I called the bottom and said, I was screaming, pounding on my desk one morning saying, that's the bottom. We're going up from here. And we did. And within like a month or two, the daily trigger crossed the weekly. The banks came out and said, okay, it's risk on again. And people didn't believe them then that it was risk on. And it was risk on again. We had the daily trigger cross up to the weekly. And if you can be persistent in that thesis, it has never failed once. It has never failed. Not one time. It's 100% accurate. It's not 99. It's not an edge like 61% of the time, not 50% of the time, not 40, not 30, not 70. It's been exact. So just pay attention to that as we move forward. And when you read articles like that, I don't think that guy can predict that stuff. I think it's bad form to predict that stuff. I think we can go into that, or a version of that, but to predict it is kind of crazy. What's the point? It's like you're self-masturbating yourself. You're master debating yourself publicly on the Wall Street Journal. And it does no good for anybody. I guarantee that article has zero solution for how to manage that risk. Any meaningful. And I just showed you how to meaningfully do it in 2 minutes. 100% of the time. So just watch it closely. Take it seriously. And if you're watching the accumulation as it's happening right now in real time, we're close. And like in this, like, you know, not close like today, but you know, if you like wake up in 3 months or 6 months or a year and you're like, oh shit, we're rolling hard and heavy, and the daily trigger's crossing, then you want to be concerned about it. And it's not concern like, oh my God, we're going to fucking do 1929. It's okay, I'm removing risk from the market. And when the conditions improve and the daily trigger crosses back up, I'm back in again. You don't have to sit there and call fucking bottoms. You don't have to fucking sit there and say, we're going to do 1929. You don't have to sit there and say, oh, it's only going to be for a minute. You just do nothing. And when it crosses and gets better, you go back in again. You're like, everybody out of the pool, everybody in the pool. Everybody out of the pool, everybody in the pool. Fairly easy. You don't give a fuck if they pick the poop out of the pool or there's no poop in the pool or it was just fear or if it was real. You know, you don't care. You're just out of the pool, in the pool, out of the pool, in the pool. It's fairly easy. Now, if you haven't been doing that, there is some risk to you getting cut up where you're flat or you're slightly under. But if you follow that rule for the rest of your life, now that you've figured it out, you'll be wealthy at some point. There's a lot of like repeat on this, you know, like repeat. Consistency matters instead of just doing the min-maxing. And I think you can min-max, but majority of you don't. Majority of you get washed out. So you do the duration thing, you do the persistence thing until that daily trigger begins to chase price. Excuse me. I'm really sick right now. But if you see that daily trigger chasing it down, you can go risk off. You know, there's no reason why not to. And if you follow this with me, and we do this together, over the next 10 years, 20 years or something, your life will markedly improve. Like, there's no doubt about it. You might piss it away on cocaine or fentanyl or loose men or something, but your life will improve for you to do those things. So you might donate it to your local charity. You might donate it to yourself, but your life will markedly improve. And I don't think there's any other place you can do that. I don't think there is. I don't think your pension can do that for you. I don't think your 401k can do that for you, with the fees on people, because they'll take that and run with it. Their minds will fucking go a million miles an hour. And I feel like that about this. This article that was written in the salacious headlineness of it, or whatever. Okay, let's get back to the other stuff. So people were asking in the Discord. They were saying you can't trade. You can't trade because you can't trade the $1,000 account. You cannot trade a $1,000 account because of PDT. You need 25K in your account. It's not just that either. Someone mentioned that earlier. Not only can you not trade it with PDT, but you can fall in and out of PDT too. If you've never had an account over $25,000, you can fall in and out of PDT. Normally with PDT, you need like double, if not more, money to buffer you when you're selling options, and that's real money. We're trading this with a paper, not with cash. So what we're starting with is just $1,000. We're gonna do something cheap, like own, or we're gonna own like Ford or something like that, and we're gonna keep adding to our position. And if you want to get to like 25 grand, if you're trying to do this with real cash, is that what you're saying? You're not trying to paper trade this, because I'm trying to teach you how to do this. But if you're trying to grow an account, that's not what we're doing. I got to get back to this real quick because it's important. The reason that we're doing this paper trading is so that you can learn how to trade without blowing yourself up. So I addressed this last week, and I want to address it again today. Very important. Which is, this is not a $1,000 competition. This is not $1,000 to $1 million competition. This is like, I'm throwing a knuckleball for the first time, and I want to learn how to throw a knuckleball. If I go to a coach that knows how to throw a knuckleball, and let's say I throw my first knuckleball and it sucks, and he's like, just throw me some knuckleballs. So I throw one and it sucks, and so I try to adjust my knuckleball in the heat of the moment. I'm not really giving the opportunity to that coach to see how I throw a fucking knuckleball. So the coach sees me throw it 10 different ways, and the coaching session kind of devolves, because when the coach is not there, you're more than likely throwing it one way, consistently bad, or you're even throwing it 20 different ways, consistently bad. So the process here for us with paper trading is how to trade, like how to sell options, how to buy stocks, how to grow money so that you can then trade zero dates. Like, teaching you how to trade zero dates is a big thing. A lot of my trades I don't show you. I show you some of my trades, but not all of them. My trades are all over the place. I have an account usually littered at different time periods. I have an account littered with shit. I can be long and short. You can look at my account sometimes, and you're looking at it and going, "What the fuck is going on in there?" And there's like, I got paid this for this, and then I rolled this, and then I got to sign that, and then I did this, I did that. My cost basis on this is there, and It can become very discombobulated. But this is more what we're doing here is not trying to make $1,000 into $1 million. Is my greater point. It's that we're trying to teach methods for trading, and look at how you're trading with paper. So we go through all these different trading concepts, and we are going to see, like, when are you buying a fucking stock? I think that people think that, like, it's automatically like, let's take $1,000 and make $1 million. It's not. It's more like, when are you buying a fucking stock? When are you opening a call spread? When are you opening a put spread? Why would you ever open a put spread in a bull market? I could actually show you. Your edge is horrible with the put. Truthfully, put spreads, edge is horrible in a bull market. You can win, but if you're going to take that put spread, you have to know that you also have to trade the market up while you're doing that, because the edge is so poor. So there's a lot that we have to go through with this paper trading thing. Now we can do something separate. That's like a challenge. With that paper trader, we can do two separate things. But this is more just form. We don't care about rules. I don't want you to trade. I would never, ever want you to trade with real money, a paper trading thing that we're doing like this, because I want you to lose. I'll be honest with you. I really want you to, like, this is how I normally trade. This is why I'm red. So we can identify where we're losing money. We keep journals of that stuff. It's more about, like, creating habits than winning. So when you're a losing trader, right? I go through periods where I'm a winning trader and I'm a losing trader. And when I become a losing trader, I stop trading. And I start to look at my trades, like dig into my trades, find out where I entered, where I exited, what was my thought process, where did I really start losing money, where I could have just been cut up maybe. Did I take the opposite side of the trade when I needed to? And so that habit forming is more important to me with you. The habit of being able to stop trading real money. It's okay to stop trading real money. If you're going to try a new method to use paper trading, like, hey, I got this new thing I learned. I want to test it out. So you just paper trade it. And then also, if you start losing money, to know that it's okay to stop trading real money. And then the habits of looking at where you're making your money, where you're losing your money. And you're never going to win every trade either. So you need to see, like, where is the real red coming from. You're gonna have, like, you're gonna go on runs. There's all kinds of shit in this. Like, you could have, like, you could be on a tear, like win, and then just one big L. And so this is more. It's not really like it's not a demonstration. It's more habit forming. And trying to identify where you can apply this with real money somewhere else. So you would never want to trade this with real money. You don't want to do this thing with real money. You want to do it with fake money. You don't really care about rules. You care more about the process of what you're doing. So that whenever you get to that point where you can trade this with real money, you're ready, regardless of PDT rules, right? Hey, well, I started buying a bunch of SPY, and I had to buy one share at a time with real money. And I ground my way up to $66,000, or 606. I think it's 66 grand in SPY, 600 or 600, $66,600 in SPY. So you don't want to get there and then not know what to do. So this is more of a this is how you trade this stuff, and you want to do it with SPY or something close to it. I like Ford because it's cheap. You can accumulate it cheap. You feel good about it. And we can do it with paper too, right? $1,000, right? I think we can. I think we can change the rules. I think we make the rules in the back end of the paper trader. But you can do it cheaply with $1,000, and you can start learning these concepts, and then we can see how fucked up you are, because people are fucked up. Like, it's weird. I was reading last night. I was in the Algo Trader. I was in the Algo Trader subreddit last night, and then I was in the Quant subreddit yesterday, and I saw two awesome things. One guy in the Quant subreddit, they were talking about how the street trades versus how you can trade, and it was fascinating because the quant traders talking about how price will never, like, they're like, when you ask a trader, why not wait for this price, they'll tell you, like a retail trader will tell you, it's because it's never going there. When they're like selling options and stuff, I sold those because it's never going there, and of course price does go there. And then inside of the quant subreddit last night, I was looking at another guy saying, you have normal when you have in the money options, you have normal, I forget what it's called, but you basically, what they're saying is you have you can predict the price of that option, but when you have far outside of the money options, you cannot. It actually levels, rather than being able to quantify the value of that option in the money. And outside the money option doesn't do that. It levels, and it levels because of OI and IV and stuff like that. So pricing matters, premium matters in those situations. And I think when I was reading that stuff last night, it's the same thing with this. It relates to this, which is the reality of trading is a lot different than the theoretical idea of trading the stock market. And so if we do this $1,000 thing, it's not, I would never trade real money doing this with you. And the point is for you not to turn 1,000 into 100,000. The point is for you to take the $1,000, start growing that money, finding out where you're losing money as you grow it, finding out where the traps are in growing money, and then also how do you give it all back? Because I would hope that even if we turn 1,000 into 100,000, I would hope that we at some point give it all back to the market, so that we can find out why. And if you have a history of doing that, do you notice how I'm not buying this dip? You notice how I'm not buying this dip? Why am I not buying this dip right now? Why am I not buying this? Let's go look at it really quick. I'm just watching this, right? I have rules, don't I? So I got a marked bottom right here in the 4-hour. There's your marked bottom. Right? Did I get the new high? The answer is no, right? So did I institute an up trade, a long trade? No. So I got these rules. And why do I have these rules? Take a guess. Take a guess why I don't have, why I didn't take that trade right there. Paper trading, right? My God, I've bought these fucking, I thought that was a dip and it keeps on dipping, right? So when did they win? When did they lose? When did they win? When did they lose? And this is fascinating right here. Because if you have a losing trade trying to buy this dip, and you have winning trades when you do buy this dip, you can actually see how frequently they win, and roll, and win even more afterwards. So risky, very risky. You can buy that, but more up is very risky. You can get rolled down here. That's very risky. Let's say you go up here, still extremely risky. When you start to get back above the 5-minute trigger, gets way less risky. You start to have like more winning, more winning, more winning. You start to have an edge. We also have the hourly trigger down here. So we're going to watch this closely. Why aren't we moving here? It's 12 o'clock, big boy. We're going to check these flows as they come in at 12. There was a line here, but I deleted it. I was trying to show you the other shit. I was deleting the line, the 10 a.m. and 1 a.m. line. So let's watch this closely here. That's nasty, right? Imagine buying that dip up there and you're just like, oh no, it's terrible. It's killing me right now. This is all FOMO, by the way. If you don't know, this is all FOMO. So I'm going to watch this. Coming into the half-hour trigger on SPX. Watch this right here. See if we can catch turn. Now, if you want to do a paper trader that's like make money, we can do that. With $1,000, we can. If you want to, I can do that with you. But this is, I think that the start of what we're talking about the other day shouldn't morph into a competition. This should be trying to identify bad habits. And bad habits, and this is a great example of bad habits. This is like bad habits personified right now. If you start to write this stuff down for yourself as a trader and saying, why does fucking Jim James always say this shit to me? Like, why does he repeat these things to me? I can show you again and again why I repeat these things to you. It doesn't matter what your plan is. Like, you need a plan and you need rules in that plan until they don't work anymore. If every single time we bounce off the 4-hour, we'll change that rule. The market changes all the time. And you should be somewhat systematic in this stuff. You can still have a little bit of like, hey, I'll do what I want to do. But whenever I do that, I typically lose. I have a high rate of losing when I'm like, fuck this, I'm angry, or that's going to turn around, or I'm going to triple down, or some of the things I have to do to make that money back is brutal. I get caught in it too. I'm guilty of it. I'm that kind of guy. So hold on here. Let's keep watching this. Look for a turn. We are coming into the half-hour trigger right now. We'll see if we turn around up here. Let's watch this closely. There's a chance of us going lower, Goliath. They're going to squeeze this real quick. I'll just tell you in advance. We're going to push right through this. But we're going to bounce soon, like here. But we might get out a little bit more. We've got the right here. See this hourly trigger right there? We're going to take a peek at it in just a minute. there's a high probability, I should say. Almost there, Goliath. One more bar, bro. And there could be one more leg lower. We don't know yet. Right about here, bro. Maybe one more tick. Right about here. It's close. We don't know if we make the second leg yet, bro. I am that good, aren't I? I just don't like taking that risk. I just know you're stuck in a bear position. I feel bad for you, bro. We're going to turn soon, brother. Almost there. Right there. I think that's it. Right there. It's close. There's a little bit more gap. There's a little bit more. Hold on. Stay on it. We're going to plunge a little bit more. I think we got a little bit more. Don't do it. Don't fucking turn around. Get fucking down there a little bit more. That's right. A little bit more. Give me an inch. It's close, man. It's like 667, 605. There's a small little gap down here needs closed. I'll snap it right here for you. We're really fucking close, bro. It's like right here. A little bit more. I'll show you right here. Right where that white line is right there. We're real fucking close, man. You can see it right here. We're close to reversal. But that doesn't mean you can't keep going down, though. There's a whole nother layer right here. 6-6 if we make one more leg. The current video is interlaced. What does that mean? But is not supported? What does that mean? It's the current video is interlaced, but it's not supported. The ingestion streams contains multiple video streams. Oh, fuck. What does that mean? I'm having some major issues here. Open widget. Warning, the current video is interlaced. The stream status is good. I did check. We were having like major issues. They were saying that we were having nodes that were down. In Detroit yesterday. I got a notice this morning from my phone provider. Let me check something here really quick. Maybe the rapture is happening today after all. Somebody go check with Australia. Hold on here. Watch out, we could drop here. This is looking like a drop. Right here. What's up with ATT? ATT fiber. Not ATT. ATT fiber down detector. Service outage information. Yep. Yep, I got service outage here. Yep. Says there's a bunch of them. 11 hours, 9 hours. You know these fucking guys lie too. That's digital phone. Let me just check and see if that's going on. Saying no outage is reported. I'm almost sure that I'm having outage problems. Warnings from YouTube and Twitch. The fuck is going on there? It could be that. Look at it. I went green. YouTube, I went green. I didn't go plaid, but I went green. And then I open the widget. It doesn't help. Like it says open widget, but it doesn't give me like a like what the fuck does the widget do? Like the widget doesn't do shit. What's the point of opening a widget if I'm green? I don't know why I said parley. I spelt that wrong. We're going to dismiss that ad break. So what are we looking for here? Turn, right? Here's the hourly trigger. Just going to watch this closely. I'm not going to reset this stream. I just reset like everything. This is the third time today I've done this, so I'm assuming that I'm having some internet issues. We're going to see if this turns around. So we're going to mark the bottom, right? Here. And go green. We got the 4 hour right here. And I'm going to check this. I'm going to check the prior 4 hour candle. Let's see what we've swept so far. That's a nice red candle right there. We're on trend right now. I want to buy this so fucking bad right now. We're still good. We've done a halfback trade. That's it for yesterday. I want to buy this really bad right now. You guys ready to go long? Let's just check this really quick. I want to go long here really bad. This is a beautiful candle right here. Want to get above this one now? Or a new sweeper below. Right back at it again. So we've got our marked bottom. That one right there. Oh. Right there. We got a little bit of a sweep down here that opens up the downside, but we're not there yet. So we want to watch this right here. So we'll do this together. We mark the bottom. Mark a potential bottom. I know you guys are like, hey, he said this, but he meant that. So we'll mark a potential bottom. And what are we looking for here? We've got the half an hour trigger above us. We got the 5-minute trigger here. There's nothing else stopping us from going up. Ooh. Let's look back over here. Let's look at a 15-minute really quick, and let's look at a 15-minute and a 5-minute. If we see anything else in here. Little nasties in here. See that little nasty right there? That's a 15-minute. We already know about that because of the 5-minute trigger. I'll just be honest with you. I already know what to do here, but I'm trying to help you. I think it's not me. 15-minute right there. We have the 5-minute right here with the 1 and the 5 over there. There's the 1. There's the 4. We get a 5-minute right here. Big cluster of fuck you. But it's not that big. 5-minute. It's not as doomish as it looks. Go back to the 1 minute right there. Keep these all right here. Mark a potential bottom. All right, so we don't buy this, right? Let's go over here. The only thing that we're looking for here is, are we able, there's 1, there's 2, right? There's 3. That's it. That's all we're looking for. We're not going to take the trade just yet. This is 1 p.m. Move these over. My God. Move that over like that. There's your first move right here. Move this over there, next half hour. All we're going to try to do is get to there. That's it. And if we can get over this hump, we can get over this hump over here. Start looking for turn higher. 5-minute, 1 minute, right in there. We'll start getting ready to take a dip buy up here. And what we'll do is there'll be a trade there if we can get above there. We'll get out, we'll get back in, and then once we're back on in business again, we'll start looking higher. So we're not there just yet. Just want to watch this closely. We do not want to get trapped in here. We don't want to get trapped in there. We don't want to get trapped in here. We know the sellers are right there. We know that there could be a squeeze up there. All right, this is where this first bank of sellers are. They could even trap us in to go to the downside. Drop us in right here. Go to the downside. I might throw up on stream here, guys. Give me just 1 minute here, okay? Just going to watch this closely here. My ears are ringing. Yeah, my ears are ringing like I'm got not fucking gnarly nausea. The 72, 172, 170. I really want to hit this 170 and 172 by Friday. I want to buy. Let's go. I'm going to look at some spreads here. Hold on. While we're doing this, hold on a second here. Let's see what they look like right now. Trading 65.71. 26th. I want to do 70, 72. We're at right here, 65. What's 72 look like? 180. Whew. That's odd. This is interesting. I'm looking at 665, 672s for Friday. They pay $520 for $180. That's pretty good. Let me just check this really quick and see where I need to be. Let's check the table on it. I only make 380 on the trade. Have that right? No, that's the 24th. I got the wrong fucking date. Hold on here. I was like, that pays really well. Yeah, it pays okay. Pays $394 on 265. It's not great. We'll keep watching the trade. So the first target there, failure here. We'll watch this last bit right here. We've got this white line right here. We got to watch this closely. This is a doorway to more downside. Yeah, no, I'm very sick. So I was sick like 2 weeks ago. And then I think it's my daughter. I think my youngest is bringing home like every disease known to man. I swear, like I think it's got to be my youngest daughter. I think that she's going to school and they're all fucking sick. I think that parents treat school like fucking babysitting. I'm sorry. I think that's real. I think that a lot of parents, I shouldn't say this, but I think a lot of parents don't have great relationships with their kids. They're not family members. They're like, oh, I got to take care of these fucking kids. And so like some of it is justifiable. Like I get that. I get that, like I got to go to work. But I think some parents are like, there's a significant portion of parents that are like 20, 30% where they're babysitting their kids. If my kids get sick, I'm like home. I don't want you spreading that shit around. But my daughter is dirty too. Like she doesn't care. So and we're back in school again, and so I think it's just running around my house. Ugh. Oh, you want to see the Powell speaking for the economic outlook? It's not on. I thought I didn't think it was on just yet. Oh, it is on soon. Next 3 minutes. Mark a potential bottom. Putting around. Watch closely. This is good. Come on, baby. Like it, like it. Now higher. $269 pays. 421 now. Oh, look at that nice little candle right there. Is this not on or something? It's a nice little wick right there. You see it? Nice wick right here. Still no trade. Is he fucking late? Yeah, he's late. He's not speaking yet. $6,650. I'm not believing this bounce right now, by the way. It's a heads up. Not yet. There, it's on now. Can you hear this?
And stable press. Chair Powell, thank you for doing your job with honesty, integrity, and
On here. I don't know what the fuck is going on here. Hold on.
there are a few examples of patriotic, decent dedication to the nation that shown home. And thank you for returning
to the Providence Chamber during
and thank you for returning
to the Providence Chamber during your final few months as Fed chair.
Can barely hear.